There's 40 overvalued markets that could see a potential 15 to 20% decrease in home prices this year. Is your market one of those? What's going on, everybody? It's Jamel Gibbs, your family-oriented entrepreneur. In this video, we're going to talk about a specific article that I just went over, and I thought it was pretty interesting. There's 40 overvalued markets, according to this article, that will see a potential 15 to 20% decline in pricing this year due to the recession.
What did you say?
One thing that I always mention to real estate investors, especially people that's looking to get started investing in real estate, is to remember that real estate is a very local investment strategy. There could be a lot of different things going on nationally, but that doesn't necessarily mean that it's going to affect your local market. So when you apply a real estate investment strategy, you have to look at what's happening in your local market. These 40 overvalued housing markets could see 15 to 20% home price declines if a recession hits. What's going to happen is the second quarter is going to end within a week and a half, maybe 2 weeks from now, at the end of June. Once the second quarter closes, they're going to announce that we're in a recession. The article goes on to say a housing bubble requires both a rush of speculators entering into the market and overvalued home prices. Unlike the housing bubble that popped in 2008, the pandemic housing boom isn't underpinned by a frenzy of speculation. This is very true. While home flipping has certainly ticked up during the pandemic, we aren't seeing the exuberance of the last housing bubble. There is a difference between what was going on in 2008 and what's actually happening today. Back then, you had houses with very little equity versus today, you have houses with a lot more equity. Back then, you had faulty lending. Today, you have lenders that are being more careful with what's going on in the market. So any and everybody can't get a loan today like they was able to get back then. So there's some differences that allows market protection in this market versus the market in 2008. Where I do think there's going to be an opportunity is, number one, wholesaling real estate, because you can kind of do that in any market. And number two, what I call hybrid wholesaling, creative real estate investing, where you have seller finance, you have lease options and things like that. So it says, is the coast clear? Well, not so fast. While Zandy won't call this latest boom, which has sent U.S. home prices up 37% over the past 2 years, a bubble, his research finds that we're once again amid a historically overvalued housing market. So this economist is not calling the market that we're in right now a housing bubble, but he's saying that we're overvalued. Last week's Moody's Analytics gave Fortune exclusive access to its updated proprietary analysis of U.S. housing markets. The firm aimed to find out whether fundamentals, including local income levels, could support local home prices. This goes right back to what I was talking about. I said that real estate is a local business. You have to see what's happening in your local market and then adjust your investment strategy accordingly. Notice that they're not making a broad statement and saying that this is going to happen in every single market. They're looking at specific local markets and then making a judgment call based on those particular markets. They're not saying that this is going to happen nationwide. It says through the first quarter of 2022, national house prices are overvalued by 24.7%. That's up from the fourth quarter of last year, when Moody's Analytics determined national house prices were overvalued by 20.9%. So we saw a little uptick there. That doesn't mean Moody's Analytics thinks U.S. home prices are about to drop by 24%. Instead, what it means is that home prices are, historically speaking, priced very high relative to household incomes. It goes on to say, now that we've reached this level, Zandy says, it will make it harder for home price growth to push upwards. There may not be a housing bubble that's going to burst because this is not the same market as 2008. But what we're potentially going to see is a slowdown in increased values on properties. So instead of your property increasing in value by 18% like it did over the last couple of years, year over year, you might go back down to what the historical average is of about 3 to 4%. Zandy is predicting the year over year rate of home price growth will flatline to 0% by this time next year. So he's saying by this time next summer, we're probably not going to gain anything in value in the properties due to the properties going up in value so quickly over the last couple of years. It goes on to say, while Zandy doesn't predict national home price declines, he estimates significantly overvalued housing markets. Places like Boise and Charlotte could see 5 to 10% home price declines over the next 12 months. If a recession actually materializes, again, we spoke about that already, we're actually in a recession right now, then Zandy says national home prices could fall by 5%, which is not really that bad considering we gained close to 40% over the last 2 years. It says, meanwhile, if a recession hits, Zandy says those significantly overvalued housing markets would likely see home prices slashed by 15 to 20%. So it says among the 413 regional housing markets measured by Moody's Analytics, the firm deems 96% are overvalued. Nearly the entire country has house prices that are higher than underlying fundamentals would historically support. So again, that's because of the inflated home prices over the last couple of years. Goes on to say, among the markets analyzed by Moody's Analytics, 183 are overvalued by more than 25%. That's up from 150 regional housing markets it deemed overvalued by more than 25% in the fourth quarter of 2021. The most overvalued markets are concentrated in fast-growing cities in the Mountain West and Sun Belt that benefited from the nation's work-from-home boom. That includes both Boise, which is overvalued by 72%, and Charlotte, which is overvalued by 66%. That's relatively high. It says, among those overvalued housing markets, which ones are actually likely to see home prices fall? You got Boise, you got Colorado Springs, you got Las Vegas, you got Coeur d'Alene, Idaho, you got Tampa, you got Atlanta, Fort Collins, you got Sherman, Texas, Jacksonville, Idaho, you got Lakeland, Florida, you have Greeley, Colorado, you got Longview, Washington, Charleston, South Carolina, Albany, New York, Denver, Clarksville, Tennessee, Greensboro, North Carolina, which is my local market, and Charlotte. So those are the markets that's potentially going to see a 15 to 20% decline during the recession. It says already we're seeing the U.S. housing market shift. As data rolls in for May and June, it's clear that the pandemic's housing boom has finally fizzled out. We're already seeing the effects of it. We're actually in June right now, and this article is absolutely true when it comes to that. New home sales, existing home sales, and mortgage applications are plummeting. This is on a nationwide scale. That's true. That's forcing some sellers to do what 3 months ago would have sounded absurd. They're cutting their prices. Last week, 6.44% of home listings on Zillow saw a price cut, and the highest weekly share of price cuts in more than 5 years. So we're starting to see the market adjust. It's not crashing, but it's adjusting as interest rates go up. It says, where does the housing market head from here? For the next several months, housing economists tell Fortune we should expect further slowing. We're expecting a correction. We don't know if there's going to be a big uptick based on what's happening in the economy and foreclosures. Again, people have more equity in houses. We're not in the same situation as we were before. People can simply sell their houses. What could affect foreclosures, and what I think is personally going to affect foreclosures, but I'm not an economist, I'm just a real estate investor, are the increase in living expenses. So gas prices up, groceries are up, overall living is up from what it has been, and we're definitely feeling the effects of that. But as interest rates go up and all of the other expenses continue to go up, gas is supposed to continue to go up. This is obviously going to have a negative effect on people's bank accounts, which could make it harder for them to pay their mortgage, basic bills in order to be able to live, and that could cause people to go into foreclosure. What we could do is adjust to what's actually happening in order to be able to benefit in a time like this. Landlords are always going to benefit during hard times because people have to have somewhere to live. If they're losing their houses, they're definitely going to have to move into an apartment. People can't live on the street. Real estate investing is definitely the way to go when times are hard. And even when times are not hard, real estate investing is still the way to go. It says Zandy goes further. He's already calling this slowdown a housing correction. This is exactly what I was saying before, a housing correction, not a bubble, because it's not going to burst. It's a housing correction. We'll see home prices continue to fall sharply as more home shoppers balk at record home prices. But it isn't just because home prices got too high. Over the past 6 months, the average 30-year fixed mortgage rate has spiked from 3.2% to 5.85%. In fact, as of a couple of days ago, the Feds raised the interest rates another 0.75%. So these rates are even higher at this point. It says, as the Feds get serious about tackling inflation, that's causing many borrowers who must meet lenders' strict debt to income ratios to lose their mortgage eligibility. So we're not going to see as many buyers in the market. Lenders are becoming more strict with their eligibility requirements. We don't have loose lending like we did back in 2008. It's just a completely different market. Shout out to this person that put this article together. What do you guys think? Do you think that we're going to have a housing correction? Do you think that we're going to see the housing market burst? Again, I think there's going to be a correction. I don't think there's going to be a ton of foreclosures like people think there's going to be. I do see a small uptick in pre-foreclosures, but again, that's due to the circumstances that we're in with hard times coming for people as far as living expenses and things like that. Is your market one of these 40 markets that's talked about in this particular article? Mine is. If yours is, do me a favor, go ahead and leave a comment in the comment section. List what market you're in, if it's talked about, even if it's not talked about. Let's start a conversation regarding this article. I want to know what's on you guys' minds and how I can help you further. Go ahead and like this video, subscribe to this channel, click the notification bell. I'm going to see you guys on the next one. Peace.